Hey traders, welcome to the EAP training program. I'm extremely excited you're here, and hopefully this program can be your transition from non-profitable trading to becoming successful in this industry. Make sure you watch this entire introduction video. It is extremely important and could mean the difference between profitable trading and blowing your account. In this video, I'll be talking through how to take this course and how to get the most out of it. First things first though, let's go ahead and make sure to read through the entire disclaimer before we begin. So here is the extremely obvious disclaimer. Something that is very important for you guys to know is that I am not a financial advisor. I'm in no way licensed to give you financial advice as a financial advisor or planner. And none of what I say in this course or show you in this course should be taken as financial advice. It is all for educational purposes only. Trading in any financial market is taking an extreme risk. You must understand that 95% of people that try this end up failing and end up losing money, sometimes massive amounts of money. So before continuing, make sure that you completely understand the risks involved in trading, and if you do not, then seek counsel from a licensed financial advisor. Now I'm going to read through the first paragraph in the CFTC Rule 4.41, and you guys can pause the video and read through the rest of the disclaimer. Trading foreign exchange or any financial market carries a high level of risk and is not suitable for all investors. Past performance is not indicative of future results. The high degree of leverage is dangerous and can work against you as well as for you. Before deciding to invest in foreign exchange or any market, you should carefully consider your investment goals, level of experience, and risk tolerance. It is extremely likely that you will sustain a loss of some or all of your initial investment. And the reason I say extremely likely, guys, is because there literally are 90% of people that try this that end up losing some or all of their initial investment. And therefore, you should not invest money that you cannot afford to lose. No representation is being made that any account will or is likely to achieve profit or loss. Past performance is not indicative of future results. Individual results may vary, and no representation is being made that clients will or are likely to achieve profits or incur losses in general or comparable to those that may be shown. You acknowledge and agree that no promise or guarantee of success or probability has been made between you and me or between you and the trading channel. If you are concerned or unsure about anything associated with trading or investing, then do your own research and talk to a professional financial planner or advisor in order to be aware of all the risks associated with foreign exchange trading and investing, and seek advice from an independent licensed financial advisor before risking any capital. Now I'll go ahead and read over the CFTC Rule 4.41 and we'll get started. Hypothetical or simulated performance results have certain limitations. What that's talking about, guys, is throughout this course we're going to be talking about back testing results. We're going to be looking at charts in hindsight. We may also do some live trading, but as this rule states, hypothetical or simulated performance results through back testing have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. So what this means is we may be looking at some backtesting results, but these backtesting results do not account for spread. They do not account for market liquidity. So those backtesting simulated results do not represent actual trading. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight, and most definitely while we're backtesting we do have the benefit of hindsight. These are not actual live trades we're taking. We're testing the market. We're looking at the market after it's already happened. So therefore no representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Now you can go ahead and pause the video and take a look at the other parts of this disclaimer, but it is extremely important that you understand all of this before moving forward, so please make sure to do so. And after you read through the rest of this, we'll go ahead and continue. So there are 3 different phases of this course. Phase 1 is the basics. In this phase, you'll learn things like candlestick formations, how to read and understand structure, things of that nature. And we'll get into more detail about each of these in the next few slides, but phase 2 is going to be the transition stage. This stage is literally meant to take you from not being profitable to converting you into a profitable trader through changing your mindset, teaching you one simple strategy, and also teaching you how to follow the rules of one simple strategy until you are actually profitable. And of course, we cannot guarantee success, but that is the purpose of phase 2. Now in phase 3, once you've become profitable, you'll learn some more advanced techniques and some more advanced strategies that you can add into your trading in order to increase profit. And now that we've briefly gone over the 3 stages of the program, let's go ahead and move on now and dive a little deeper into each of these phases. Phase 1 is going to be the basics. In this phase, we're going to talk about why most traders fail. Again, we're working on your mindset here. We're going to be talking about the importance of discipline and risk management. We'll talk about the anatomy of a candlestick, how to read price action. We'll go through some advanced structure identification. We'll go through how to read market trends, introduction into indicators and how we're going to use them correctly. And we'll also talk about the candlestick entry patterns that we're going to use in the transition phase. So for starters, if you're a complete beginner, then of course you'll need to watch every one of these videos. But if you're someone who is a little more advanced in your trading, then of course there's a few of these you can skip over, such as the anatomy of a candlestick. Now, why most traders fail is extremely important if you're not profitable to watch. The importance of discipline and risk management, another lesson that's going to be extremely important for you to watch. You can skip the anatomy of a candlestick if you already know that. How to read a price chart is going to be very simple information. I would suggest watching that just because we're going to be going over strategies that use the way we read a price chart here at the Trading Channel in order to incorporate that into the strategy. So that's probably something you'll want to take a look at. Definitely make sure to watch the advanced structure identification. We'll be using that in strategies in the advanced section. And also make sure to watch how to read market trends. We'll be using that in different strategies as well. I would suggest definitely watching the introduction to indicators and how we use them correctly, so that you completely understand how we use the indicators that we'll be taking a look at throughout this course. And of course, you'll need to watch the candlestick entry patterns so that you understand the candlestick entries we're going to be using in the transition phase. So moving on from phase 1, now that you understand the basics, what we're going to do is step into the transition phase of the course. Here in phase 2, the transition, the main goal of this section is going to be to transition you from not being profitable to profitable trading. With a step-by-step process, you will learn one simple yet accurate strategy, and we will go through the process of creating a profitable trading plan around this one strategy. The reason I like doing this, guys, is because too many times I've seen traders be paralyzed by the amount of information they receive from a course. And in reality, the most important part of taking a course is to be going from not profitable to profitable. The easiest way to do that is going to be with a very simple strategy, with just one strategy, and creating an entire profitable trading plan around that one strategy. Again, I've seen too many traders that go through courses and they come out with 5 or 6 different strategies and they try trading them on every single Forex pair. And what ends up happening is they never find a way to become profitable because they don't have a step-by-step solution or a step-by-step transition for them to go from not being profitable to being profitable. So that's what the transition phase is meant to provide. The simple strategy you will learn is called the pullback strategy. I'll go through teaching the pullback strategy itself, all of the rules associated with it. And this is a complete rules-based strategy that is extremely easy to follow. And so we'll also go through back testing the pullback strategy. We'll do that together on a couple of different pairs. After completing a back test of about 10 pairs, we'll choose the best 3 to 5 pairs to trade with the pullback strategy. Again, another important step at the beginning of your trading career is to choose just a few pairs to trade on so that you're not having to look at 17, 18 different pairs. You want to make sure you're only trading between 3 and 6 pairs, especially in the beginning of your trading career, just to keep things extremely simple. So again, guys, all too often I see traders that try to trade every single pair or try to trade 10 or 11 different pairs when they're first starting out because their mindset is that they need to make a certain amount of money every week or every month, and the only way to do that is to trade a bunch of different pairs. Well, what you'll notice throughout this course is our goal is not to get you from your $500 account, $100 account, $10,000 account, whatever you have. We're not trying to get you from having that account to being able to live off that account by trading 10 or 11 different pairs. The very first, most important step for you to take is to go from blowing accounts and not being profitable to becoming profitable. And what I've put together here in the transition phase is what I believe is the best way for you to be able to do that. So we'll go through choosing the best 3 to 5 pairs to trade the pullback strategy on. We'll create a risk and money management plan together. Of course, that is a personalized thing. I will show you guys my personal risk and money management plan, but risk management is something you'll have to decide on your own based on your risk tolerance. We'll create that plan. We'll do some demo trading with the pullback strategy, which is another important step and a very important process while going through the transition of not being profitable to a profitable trader. And then finally, we'll get into trading with a live account. And of course, this is only when you're comfortable after creating your entire trading plan based around this pullback strategy. And if you'll notice, guys, looking through this, these are all steps that unfortunately most traders never take, and I do believe that that's the reason most traders have such a hard time becoming profitable. So in the transition phase, we're going to learn the strategy, we're going to backtest the strategy, we're going to choose the best pairs for the strategy, again creating a trading plan around one simple strategy. We're going to create a risk and money management plan around that strategy, and then the next step is to go through demo trading that strategy. Sometimes this process takes months, guys, this demo trading process, because you have to trade until you're comfortable placing the trades based on this strategy. After that, of course, we'll get into trading with a live account. And again, guys, of course, trading with a live account is up to you, not me. You will have to take your time in a demo trading account. You have to take your time creating your own risk management account. I'm throwing these in here as examples only, not as suggestions of what you should do, only as examples of what I've done in the past. So this is going to be the transition phase. And now we'll go ahead and move on to the next phase, which is going to be the advanced. And here in the advanced stage, after the transition phase, once you're actually a profitable trader based around that one simple strategy, you'll be ready to learn more advanced strategies and techniques to implement in your trading and help improve your profit potential. So again, guys, this section can only happen after you've become profitable. I do not suggest anyone even look at the advanced section until after you've become profitable through taking the transition phase of this course, because it will do nothing but confuse you. And again, the best method, the best way to becoming profitable is through an extremely simple system, an extremely simple trading plan, again, to make that transition possible. So here in the advanced, what we'll be talking about is multiple time frame strategies, more advanced strategies, correlating pairs, advanced multiple target taking methods. Again, the pullback strategy is going to be one target only, one in, one out. We're not going to deal with multiple targets. Just talking a little more about mindset, the important thing is not to make as much money as possible in the beginning. It's just to become profitable. Keep that in mind. I'm going to repeat that over and over throughout this course. After the advanced multiple target taking, we'll also go through how to create your own trading strategy, because you're going to know advanced candlestick entry patterns. You're going to know many different conditions that you can use in order to incorporate into a strategy once you've gone through this advanced section of the course. So once you have all of that information, you may want to take some of that, combine it on your own, and create your own strategy. And we're going to talk through that as well here in the advanced section. So as you can see, taking you through step by step in an organized way to help you reach your goal of improving your trading. Now, other than the course, there is another aspect to this training program, and that is the email analysis you receive 3 to 5 times a week. Now let's go over some important things that you need to realize about this email analysis. This is not a signal service. The email analysis you receive is in no way a suggestion for you to trade that specific pair, that specific instrument based on any specific strategy. Do not blindly place trades based on the emails that you receive. They are not meant as signals. They are only meant as examples to help you better understand the strategies that you learn in this training course. And I know even after me saying that, a lot of you are still going to have questions of why not place the trades based on those emails when you're sending me emails of trades you're placing. Well, the trades we're placing in the email analysis, although they are all based around the strategies we use, although they're all based around the strategies you learn throughout this course, they're not based around a specific profitable trading plan. And what do I mean by that? Well, we're trading on all different pairs, so I can give you guys as many examples as possible. We're not taking every signal that we see, because I'm not able to send out every single signal that happens on the specific pairs that we trade in our portfolio for these strategies. And let's go ahead and dive a little deeper into that. Let's go ahead and talk a little more about why you should not use the email analysis as a signal service. So here we have why not, right? Well, a profitable trading plan consists of a certain selection of pairs that perform the best when it comes to drawdown and ROI. So that's what we're doing in the transition phase, whenever we're trying to figure out the best pairs based on drawdown and return on investment. Also, when trading a profitable trading plan, it is important to trade every signal that happens based on your plan, so that your results are as consistent as possible with your backtesting results. Otherwise, it is impossible to make an estimate of the possible drawdown or the possible ROI of any system. So with the email analysis, again, we're trading based on the strategies that you will learn in the course, but we're not trading based on a profitable trading plan. We're not placing trades just on the specific pairs we use to give us the smallest drawdown and the best ROI, which can greatly affect the performance of a strategy. We're also not able to place a trade for every single signal that happens. We're only sending out 3 to 5 trades per week. So of course we're not placing a trade for every single signal that happens, meaning we are not staying consistent with a profitable trading plan when sending out these emails. And the reason we're not is because these emails are not meant as signals. These emails are meant as examples. I'm trying to provide you guys with examples of trades that meet the rules of the strategies you'll learn so that you can see them perform in a live market. Again, I will repeat, do not trade blindly based on these emails. The only reason you should be trading based on the email analysis is if you already have your own written trading plan and one of the emails we send correlates correctly with your personal trading plan. Other than that, use the emails as an educational service to help you better understand the strategies that you learn here in this program. And that's going to